Hi, welcome to the Market Alert for Tuesday, the 27th of June 2017. So yesterday, instead of going through the live chart, we'll just have a look at the historic chart, as the signals are the same this morning, and mix things up a bit and start off with the Dow. So we had a buy signal, and as I said in the email that I sent out, if the market goes up to the 21,500, watch out. And sure enough, although I have to say I wasn't expecting this reaction, sort of expecting more of what we've got here, where the market traded sideways actually after sort of along there. But I have no idea what this was. I still haven't found any news about it, but obviously there was some sort of profit taking or something came out that sent the market lower. And if you look at the daily chart, whilst we're here, we'll cover this as well. You can see the market trading up to the 76% retracement, which is also one of the figures that I mentioned in the email as well. And then you can see from there the market coming back down, finishing on the lows. You'll notice there's no selling. Very, very strange day. There's no major increase in volume at all. So again, it's something that started to happen. If you think this is odd, wait till you see the implied volatility in just a moment. So the Dow on the overnight market, sorry, let's just go back to the afternoon. So after finding support at this area here, which is the 21,400, which I've spoken about before, we see the market moving back to the upside before then getting stuck in a sideways range. And as I've always maintained, if you've made money in the first part of the session, then don't bother with the second half, and you'll see why here as the market traded sideways. News wise, let's have a look at that whilst we're here. Well, it looks like we've got a bit out today. Also last night, of course, we had Draghi speaking, and it seems like they're wheeling him out again today. He's going to be speaking at 9 AM, trying to bring calm to Europe, which has seen the Italian banks bailed out again. Unbelievable. We've got the stability report. That's going to be glowing. Take my word for it. That's going to be a glowing report that everything is fine. Carney speaking at 11 AM, so in the pound today you want to stay out when he's speaking at 11 AM. And then we've got consumer confidence from the US at 3 PM. Wow, we have got a news packed day, haven't we, with Harker out at 4:15. Oh, and Yellen's speaking tonight. Right, that's an interesting one then. So, and it's Tuesday, so expect the Dow to be sideways for the first part of the session. I would imagine it to be. I can't see, unless something happens in the pre-market session, but the market's going to be waiting for Yellen at 6 PM. So we've got a central bank day today. They're certainly bringing them out, aren't they? We've got Kashkari, Harker, Yellen, Draghi, Carney, and I'm not surprised really, because when you see articles like this appearing in the mainstream media, Daily Telegraph, next global financial crisis to hit with a vengeance, warns the Bank for International Settlements. And as they rightly say, or as Ambrose says in this part here, the Bank for International Settlements said the rot in the global monetary system has not been cut since the Lehman crisis in 2008. You're not kidding. I'll refrain from using any profanity, but honestly, it just sometimes it leaves me speechless when you read these sort of things. I've been talking about this for years and years, and now I firmly believe that going forward we're going to see something start to unravel. We're nearly 10 years into this so-called manufactured QE-led recovery that is no recovery. GDP figures are appalling. All of the economic data is turning down because it was all pumped up on money again, and this is what the article's referring to, as we've got here. You know, the global economy is caught in a permanent trap of boom and bust financial cycles. Well, of course it is, because it's a case of turning on the credit taps, turning them off, and this has been that way since the 15th of August 1971, when Nixon removed the gold standard. And this is why you've seen all of these bubbles over the years. They burst without fail, they burst, and we're going to see exactly the same thing again going forward. Just switching over to let's have a quick look at the pound. A slight odd thing going on here. I'm going to have to look at the settings, because in ETX we had a signal to the downside when the announcement by the government with the deal with the DUP for $1 billion. Interesting how they found $1 billion for that sort of deal to shore up a majority when they can't find it for the health service or anywhere else. But let's not get political, it just seems slightly odd. But for those of you who know how money is printed, there's no problem in typing a few letters on the keyboard or a few numbers on a keyboard, and hey ho, abracadabra, another $1 billion is produced. There was a buy signal followed, but you can see there the market became sideways and found resistance at this area here, which I have no idea what it is. Let's have a look. It's going to be the 127.50 area, that blue line there. So I'm going to have a look at the settings in core spreads to see why these weren't picked up. It's the first time I've seen a discrepancy between the two, so I'll have a look at that and report back if I find anything strange, like I did with the Dow, where it needed to be adjusted slightly. And then I have to say, as far as being utterly surprised in 20 plus years of actually trading, has to be the implied volatility for yesterday. We saw the market drop sharply by 100 points, and wait till you see this. Let me just grab the chart for you. Okay, so feast your eyes on this. How can the market actually go from 798, or the implied volatility go from 798 to 762? This is an historic low, an all-time low in implied volatility. I've never seen this before in the history of trading implied volatility, from uncovering how this actually is an indicator of what's to come since 1994. I've never seen this ever. I expected this to be above 8 this morning. It is at 762, and this is why I've continued to keep these on the chart, and that's why they're in red. They are alarm bells. They are a warning that something is coming down the line. If you look at it on the 6-month chart, you see exactly the same new low, which you go into obviously because it's a historic low. And 1-year chart, you can see there's nothing going back for the year here. There's absolutely nothing to actually show. If I could draw a line straight, of course that would help. 2-year, nothing. And then we've got 10-year, and this off the 10-year, if I can draw a straight line, is below. There we go, completely below. We've never seen this before down here. So again, a very interesting pattern developing here. And again, all it means is when the next correction comes or crash comes, as the Bank for International Settlements is warning, the mainstream are starting to get on board, the Financial Times and whatever, they know that QE has failed miserably. It's all been an illusion, and all it's done is created the bubbles, which I've spoken of dozens of times, whether it's in the bond market, the stock market, the housing market. All of these bubbles will burst. It's not different this time. It never will be different when you actually pump trillions and trillions into the market. This is what actually happens, except this is bubbles on steroids this time. Right, so that's it for today. Again, it's Tuesday. Market can be generally quieter. We've got we've got the whole of the central bankers out today talking, so it's going to be interesting to see what the market actually does now it reacts to what they've actually got to say. Probably a pack of lies as usual, and everything is fine in the land of central banking, which we know is not true, and that's generally the rhetoric you use here before the market starts to implode as well. Right, that's it for this one. I will report in if there's anything other than that. Thanks for watching. See you in the next one.